Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Tuesday, October the 4th, 2016, and this is the Daily Report for Gold and Silver. And what a day we've seen. Wow, we've got a tremendous sell-off across the board in the precious metals, a devastating moves to the downside. We are neither long or short, so we're not profiting and certainly not hurting from that. But as you can see, spot gold still trading pretty active at about $12.69. $12.70, putting it down about $41 on the day. Now the low has been $67, so we're about $3 off the low, and the high, of course, we're far away from that at $13.13. Let's take a look at December futures. $12.72, down about $40, low $69, high $13.15, and as I said, off about what, 3% on the day. Now, of course, Silver shines brighter when the market goes up, but it also burns deeper when the market comes down. And silver is trading off about 5% on the day. Tremendous move to the downside, below $18 at $17.93, the low $17.74, and the high on the day $18.94. So about a $1.20 swing in terms of the relationship between the high and the low on the day. This, of course, is COMEX futures. And when we look at spot gold, $17.89. Also off almost 5% on the day, a drop of about 90 cents. If you recall from yesterday's show, we talked about the fact that we reached the apex of this compression triangle in silver, and it did break to the downside. Traders, I didn't expect the sizable energy release we got today, but that's typically what you'll see is a release of energy, except that we don't see it to this extent. We'll certainly want to look at silver as well as gold, talk about where we can find support and what we're looking at over the next couple of months, all on today's Daily Report. So traders, here we are Tuesday, market closing off gold about $40 on the day. Interesting scenario brewing in the market, an interesting point that we actually hit these lows upon. I'm going to really cover my short-term analysis, meaning over the next month today, and then over the next couple of days I will put together a concrete plan really for the end of the year, now that we've had this dramatic move down. And the key right now, and we talked about this over the last couple of days, was the fact that we had a tremendous level of support. That level of support coming in roughly at about 1300, 1305. It's represented here. You can see it's a 38% retracement. That retracement, of course, is from these lows at 1200 up to these highs at about 1375, which is the high for the year, obviously right in here and here. We talked about the fact that we did have a flat bottom, meaning that we've had these lows that have really held up till today. But what was really disheartening was the fact that when we looked at these highs, we had seen a series of lower highs. And these lower highs, of course, was really giving us or alluding to the fact that we were under pressure in the market because we couldn't get new highs. But at the same time, we were holding these lows, and that's why I was holding out a little bit of optimism as far as finding some potential support in this area. Of course, that was not to be. You can see as this market broke through this particular price point, stops were hit, selling ensued in the market. Now, you had a strong dollar, but the dollar alone doesn't really tell the tale. You had a lot of selling coming into the market. Now, here's what I find interesting. The 61% retracement comes in at 1266, and that again is a 61% retracement from 1200 up to about 1375, comes down, you come to 61. So quite interesting in terms of how this fib number has come in. And so we want to see if the market can hold this area and bounce off of this area, or if it breaks below it. Because if it breaks below it, we've got to put in another fib retracement level, which is 78. In fact, let's go ahead and do that now. And so traders, I've just effectively put in our 78% retracement point. Again, it is a retracement. It is a shorter term retracement simply from here to here. Of course, we now want to look at a retracement from these lows at the beginning of the year to the highs so that we can plot out and look for some harmonics that come into relationship with these numbers. But before we do that, and I will add that in a second, but before we do that, take a look. If it does not hold 66, the low today 69, 1269. The next real level that we would look at would be that 78% retracement, and that comes in at 1238. Let's see if we can find some sort of harmonics on this chart. And so traders, you can see I've added another fib retracement. Doesn't give us a ton of information. This fib retracement is starting from 1045. It is taking us up to these year highs that we got at 1374. When we do that, 1300, we broke through that. That is a 23% retracement of the larger move. Then 1250. Now 1250, of course, falls just in between this 78 and 61, but that could be an important level on the big picture to watch if the market continues to drop. We've got 1238. And then when we look at the 61% retracement, the lowest possible end of the retracement, that comes in at around 1272. So we're not really getting any straightforward harmonics, which tells me that these moves of recent are maybe overdone. However, these are the different levels that we need to look at. If 1266 holds and we get a bounce, we could get a nice bounce at least back up to 1300. If not, the levels we need to look at are going to be 1250 and then 1238. Those would be the next levels to look for potential support. So traders, what about silver? Silver really plummeting today. This, of course, is COMEX futures, a 1785, putting it off 5.4%, almost a 5.5% decline on the day. If you recall from yesterday's show, we did point out the fact that we had broken through this compression triangle and broken through on the low side. This is yesterday's candle right in here, and you can see we absolutely saw this market break well below that long-standing support line drawn in by simply drawing a line from this low here and this low here, and to some extent this low here, although it does come up a little bit. Now, with that in mind, this tremendous drop breaks through the 38% retracement level. That comes in at 1827, of course. Next real level is 1739. And that, of course, is a 50% retracement. And then below that is 1650. 1650 is a full-blown 61% retracement from these lows at the beginning of the year up to the high of the year, which came in at about $21. Now, this market has moved substantially. In essence, it has almost doubled in price when you consider it was at 14, went to 21. Of course, 28 would be a double, but still significant. It gained, what, 2/3 in terms of value. And so for that reason, we could easily see this market move back to 1739 to 1750. The only place that we would have looked for support is this top here. Draw your attention to the fact that when we draw a line across it, we have absolutely broken below there. And so there's not really too many areas now that we can look at on a technical basis for any kind of a top or a bottom that lines up yet. And that's why I believe we could see this market move as low as about 1750. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.